Hello and welcome back to my channel. So today I'm super excited to tell you guys the number one reason why you cannot find schematics. And that reason is because you're not looking in the right place. So I'm going to show you where to find schematics, and stay around because I'm going to talk to you a little bit about my new Smart Money Risk Management workshop course. And this course is also going to help you find those sniper entries when it comes to Wyckoff Schematics. So let's get right into it. I have a 20-point confirmation checklist. So there's 20 things that you must do before entering a trade. And the second item on that list is market cycle and structure. So if you want the full list, I will show you guys where to get that later on. But let's start with literally the most important thing, which is market cycle and structure. Now, guys, I highly recommend you take notes, especially if you're not going to jump into the course. You want to start on the 1 hour, nothing higher. The daily doesn't matter unless you're taking a trade next year, okay? We're trying to get into the market this week and preferably today, preferably whenever we find an opportunity. So number one, start at price action. This is current price, okay? Do not go left or right. This has already happened. You're trying to figure out what's happening next, so we're going right to left. You want to start with your highest high or lowest low. So this is price action, and clearly we have a high before we have a low. We're going to go with our high. This is our high, and we're going to put a little line. That's it. Then we're going to go all the way to the low and put a low. There's no lower low. We're not doing anything in here. We're going to go to the high, low, and high. So you need two highs and higher highs for up structure, two lows and lower lows for down structure. So if we're reading this way, high, low, high, higher, low, then we don't have structure right here, right? But if you look here, we also don't have structure because this high goes higher than this. So this structure is very confusing. So personally, on a Sunday, when I see this, I would not use this pair. Why? The structure is unclear. Too many of you guys are going to still use the structure, go in here and pretend we have schematics, and then be confused when it's down structure, when you think it's down structure, but it actually goes into something else. This is unclear structure. All we do is move on. Let's try something like USD CAD. I'm going to clear this. I don't use this broker, but I just use it for teaching purposes. Okay. USD CAD, we're on the 1 hour. Let's start with price action. So we're at a high right now with price action. So right now we actually going to start with the lowest low. So this is a low, but our lowest low is here because at this low we still have lower. At this low we don't have any lower. So we're actually going to go low, low, high, low, high. So this right here, again, we don't have that perfect structure, right? Because we have high, low, higher high, lower low. So if we do one more in this scenario, then we have low, high, low, high. So now we do have up structure. Also, if we have up structure right here, this low that went a little bit lower did not change the down structure, because in order to have down structure, you need high, low, lower high, lower low, and we don't have that. So this is still holding the overall up structure, okay? Meaning if once price moves on, I wouldn't do it at price action. If we take this and we want a little bit retracement, you don't want to do it with price action. This is still up structure, right? So we can tell we're in up structure. So guys, don't be marking up these little minors and saying the trend is changing. This is how you need to do structure. And if you don't have it, you need to move on, delete the pair, move on, move on, move on. Do this on Sunday. Structure doesn't change that quick, and you know which pairs to be working with. Okay, so now that we did that, we can get into the range. So the range is from this low to this low. Sorry, this low to this high, right? The range is here. So you don't want to just get on the chart and be like, okay, I think it's up structure, I'm going to work with this range. No, you need proof. The market moves with lots of clues, but you guys are too excited and just want to be like, oh, my imbalance, let me try to enter here, I think it's a trade. No. Okay, so we have the range. Now, you can mark up the minor structure in the range, but we're going to do it on a lower time frame. So you could do the 30 or 15. Let's start with the 30. Let's just walk it down. Okay, so we have the high, low, high, low, high, low, high. So in this scenario, which is different than the first scenario, I actually labeled every single high and low. I didn't do that when I was on the higher time frame looking for structure. So the difference between structure and working with the range. So now I'm going to review what I did. Low, high, low, high, low, high, and then this low came lower. So again, this didn't change cycle, it just came in a little bit lower. So we don't have to do any counter trend for counter downtrend or anything. We're still in up cycle. So as you guys see, we have clear up structure. Now, this is another part where it's not really widely taught. So I'm going to teach it to you guys again. We have more detail later. So we want to pay attention to expansion and consolidation. So expansion is when price is pushing up, and consolidation is when price is moving sideways. Okay? So right here, we have expansion where price is on a rally moving up. You see how we have these two lows that are pretty close and these two highs? This is all consolidation. I don't care. You guys are too much in the candles. I'll tell you when to get in the candles. We get in the candles when it comes to schematics. But right now, this is consolidation, right? So actually, if we take it, which we're not using, we're only using this data. So I don't need to do all this. But just so you guys understand, this is expansion. This whole push up is expansion. If I break it down, just to show you guys, I could break it down to more detail, where this is expansion and this is like consolidation. I would take this as consolidation too. Yeah, like that. And then this would be expansion. So that's a little bit more detailed expansion for this area. Just because so price moves expansion, consolidation, expansion, right? Price moves in waves. Sometimes the waves are big, sometimes the waves are small. If we get on a 1 minute, we can make this smaller, but we don't need to. So step one was overall structure. Step two was in the range, right? Working within the range. And I also want you to understand expansion, consolidation. Price is pretty much starting to consolidate, right? It might be building a little bit of a distro to come back. We'll check that in a second. But now let's look at this range right here with an expansion. We know price should pull down 50%. So we're going to go 50%, and we're going to look for a point of interest below the 50% range. I'm going to take it back to the 1 hour for a second just to see how detailed this gap is. Okay, we may have an order block here. So 50% of the lower one. And I'm going to check that after. I'm not going to just confirm it because I went on one random time frame. And I'm going to go down to the 15. I want to take the lowest imbalance that I see, which would be down here. And that would be my point of interest. So I'm going to get rid of some of this so we can not get distracted. So that's why you need to pay attention to how we got here. I want to talk to you about the Smart Money Risk Management Workshop. So if you're still following along, I want you to understand all these concepts are in my course. And if you want to learn the confirmations that we use, we have a confirmation checklist within the Smart Money Workshop course. So I highly recommend clicking the link in the bio and signing up as soon as possible if you want to be successful in trading smart money concepts. So we have a point of interest down here. Like I said, we may have a order block. Okay, we also have a gap here. So the gap starts right at the 50%. So this is a point of interest as well. Anything higher than 50%, we shouldn't use it because price most likely will come lower. Okay, so we have this gap. And that's where I would set my alert. Now I'm going to delete this order block because the gap is showing on this time frame. And my alert would be set right here. And this would be a point of interest. Now, in this particular case, we do have a little bit of what? Consolidation. So we can look for a schematic here. To me, I see 3 drives up, no 3 drives down. So I already know it's not going to be valid for me. But we're going to wait for price to come here. And as it comes, it may accumulate in this area. So you guys, if you want to learn how to actually find the schematics and what they look like, again, highly recommending downloading the Smart Money Playbook, joining the Platinum Package, or if you're actually kind of decent off of schematics and you're just struggling to manage your trades, you need to get the confirmation checklist that's in the Smart Money Risk Management Workshop. And I also show you how to use the confirmations, right? So right now, I just showed you how to use the confirmations when it comes to structure and points of interest. So if you want to learn how to set those 1 to 10s, if you want to learn the phases in which you should be waiting for a sign of weakness versus an MSAL, etc., I highly recommend you clicking the link in the bio. So thank you guys so much for watching. Don't forget to comment, like, and subscribe. I want you guys to leave some comments, ask some questions. Make sure you put the time frame so I can explain. Like, all of us really deserve to be successful in this area, so I really hope you're next. See you in the next one.